Okay, so jumping back on again today, I wanted to go through some alternative uses for the trend channel rather than identifying that whole trend and it being quite wide, is to be able to, in effect, look for the train tracks that the trend is moving in for the lower and the upper bounds, and to try and help you more conservatively manage a trade. So I'm in a trade at the moment on gold futures. Talk about that in a minute. Just wanted to go through something that some people may use, some people not, but I think this is a good tool. So when I'm on NinjaTrader, it doesn't matter which platform, I'm using the trend channel tool down here. And what I'm doing is, once I've had some high pivots and some low pivots, I can join the dots, okay? But those dots are quite strong while we're still trending, and they will help you to conservatively manage the trade. So let's talk about the bottom one first. So we get a major pivot here. It runs up. There was a trade with a 6-star buy for the xBrat algo and a VWAP predator and at the European data point here. That was a big confluence there for a move up. But then that found resistance here and came back down to test this sort of area. So if I join the bottom of these two pivots up here, that's my lower bound, if you like, of that track. And then what I want to do is I want to look at some other major sort of rejections of the lows here where it bounces off. So this one here and this one here, and then recently here, gives me a really good indication of where the upper bound of that track is. And then conversely, at the top here, we've got this pivot here. We've got big pivots here and lots of wicks here. So again, we've got a train track at the top there. Now, they're not exactly parallel, and they probably never, ever will be. But these are areas like buffer zones, if you like, where it will come and if it's staying in them buffer zones and not breaking out of those buffer zones, the trend is still strong. So I took this trade after we've hit this sort of non-linear support and resistance zones. And why am I using this? Because this is gold and it's near the highs. With my guardian zones, if I just try and move this all the way down, then my linear support and resistance zones are all the way down here because we're near the highs, and they're not useful when something's near the highs. Okay, so we have to use this technique, if you like, with these non-linear support and resistance zones, where we're identifying pivots on a recent trend, and this is today, going in from last night and today, to try and identify where to manage the trades. So I had the buy signal, the VWAP predator here. I had a buy step theme apple green, quite a bit of room up to this sort of channel that's moving higher and higher. And I put a stop market order in here. It didn't actually go in for quite a few candles, but it's now in. Okay, so it's the trade is in. How to manage that trade is can be quite difficult when we're near the high. So again, using this lower bound, I can identify, we've had another pivot point here that rejected. That's the top. We're at 270 bucks in profit right now. So I'm going to go one. So the open candle, I'm not really interested. I'm in the candle before, and I can see now I can adjust this stop up to this point here, around about just below that buffer zone, if you like, of 3402.4. Now I have got a double down order here because this trend has been present since the market opened on Sunday. If it breaks out of these tracks, the likelihood is it's going to come and tumble down. So I'm on one contract long, it's 30 ticks in profit right now. If it breaks there, I'm probably interested in two contracts going short, because this is a very, very strong channel that we've identified. This is a trend. If this trend is broken, the likelihood is it's going to come down and test at least this lower pivot down here. Not this one down here. So what I've done is I've identified those two train tracks. for the lower and the upper bound of my pivots and my trend. I've conservatively managed this since it was in using this. So I'm one candle below the slope of my train track, if you like, of my buffer zone for that lower bound. So all I've got to do now is we can see we're starting to get closer and closer to that entry, but it's not one of those like a scalping strategy that you're going to make it risk-free really quickly. This is a meandering type of trend trade, purely because we're near the highs. Yes, gold's having a good run at the moment, but we're near the highs, and we've just got to be conservative to allow those bits of selling, those profit taking that traders are going to take. So being conservative and using this type of strategy is very good. We've got about 55 seconds for this candle closes, and then we'll adjust again. We can see this had this pullback just recently before I started the live stream to come into that sort of area there, into that buffer zone again, and bounce back off again. What I'd really like to see now is we're forming a short-term sort of resistance up here between sort of what have we got, 3408 to around about 34092. So there's like a 10 tick resistance, so very short term, but I'd like to get a close up above 3410 really. That would be pretty cool. We're quite a long way until the US gold pit open, which is good. We've got no real data today. If I look down on the Trading Buddy, the next data is at 10 a.m. We got manufacturing index and ECB President Lagarde speaks. So we're sort of clear of any sort of major data reversals or reactions. So that candle's closed. So now I need the stock to adjust to around about 3402.7. I'm just going to move that out of the way a minute. 3402.7. There we go. And then I'll adjust that reversal there about 3 ticks below there. So, again, so it's below the candle that's closed. So we've got a little bit of room just underneath there as well. So what we're doing is trying to rely on this buffer to give us that, as long as that trend keeps going, that conservative trade management strategy. This should, unless the news, unless some big news comes out, Mr. Trump or something like that, there's no data coming out. The next real sort of catalyst is that gold pit open. There's no physical pit, but it's where a lot of the gold traders start to work in the US. So that's the time where the volume increases traditionally. So that's where we are with that. Again, a lot of this will be tied in with our correlations, if you like. So gold with ES is very, very sort of strong correlation. We used to like to see a negative correlation there. At the moment, I've got neutral correlation. You see with the Trading Buddy here, I've got neutral correlation between gold and ES. I've got neutral with gold and 6E. Usually we'd like to see a positive correlation there. Gold and the bonds, negative correlation is full negative as well. That's pretty good sign. And we've got this candy stripe effect with all the indexes at the moment. So there's no real correlation. There's no real direction. It's not a fantastic type of thing, but I just wanted to come on here to basically show you how when instruments do get near the highs, whether it's a monthly high, a 90-day high, or an all-time high, or a yearly high, there are going to be instances where previous support and resistance zones, even the last month or so, aren't really going to be effective, those linear support and resistance. So really we've got to, using this buffer zone type sort of strategy here, where we're picking up these main pivots, highs and lows there. So we've got that train track, if you like, that buffer zone of those highs where we would expect that resistance to happen on that trend, and then the same with the support down here. So what we're looking at right now is this support holding, this non-linear support. But if it does break, this trend is over. especially if we get a close below there, we could, this could come down all the way down to test these sort of levels again. So we have to be prepared to potentially, for me, I like to double down, and be, especially if we're going long and it reverses on us, because gravity takes hold and it could be a really good trade. So that's where we are right now. So all I'm going to do right now is this is a live stream, so I'm not going to necessarily jump off right now. If this was me making a video, I would probably just jump off and then make another video when something happens. But I'll hang around. It's a little early for me. It's only 7:03 a.m. EST. I presume some traders are up, or they should be now in the US, looking at these sort of the behaviors and getting ready for trading and getting some of that pre-market trading in, which is always a good time for trading commodities, currency futures, that sort of thing. Really good time to trade. So I will see if there's many. So it's very hard to tell who's watching because I'm using a restream technology, so it's streaming on a lot of different places. So very difficult to say who's watching. But let me just have a quick look on the YouTube channel. Okay, so we've got a few on YouTube, which is good. If anyone's got any questions on what I've just talked about, please put it in the chat on YouTube, and it will come to me on my system anyway. So if you've got any questions on that, I mean, it's pretty straightforward, and I would suspect most sophisticated traders would use this type of strategy for nonlinear support and resistance, especially, as I said previously, when we're getting these all-time highs or monthly highs where we're in that fresh air and there's no real linear support and resistance zones that we can rely on. We need to understand how that trend's behaving right now. So if there are any questions, let me know. Okay. So I'm just going to zoom out a little bit here so we can get a little bit of a better view. So I usually like to go about 3 ticks if this does reverse, just to make sure we're way outside this buffer zone that, today we've not been outside. Again, I've got my take profit all the way up there at it's fictitious right now. We don't know how it's going to go, but I just wanted to sort of share this tool. It's pretty cool. I mean, it's available on, it doesn't matter what platform you've got. A trend channel drawing tool is available anywhere, whether it's TradingView, Thinkorswim, TradeStation, MotiveWave, MT4, even some of the older platforms like MT4. They're available, but usually when you're swing trading and looking for longer term trends, you would use that trend channel on either side of these pivots and look for that main channel. But what I've tried to show you today is to try and draw these buffer zones in to look for that support and resistance that's non-linear, and use those channels to help identify those. That will help you potentially take profit, but also to try and conservatively manage it. And in this case, again, it's not for everybody, doubling down on the reversal there if that happens. Okay. Look what oil's doing. Pretty mixed in the bias depth heat map. Not a lot going on there. Did have nice test this previous the confluence zone up here overnight, and then we've just been very slowly creeping down, but very mixed on the bias depth heat map. No real great trading opportunities there at all. You're getting signals here, but signals are given by algorithms that have certain rules. But you need the confirmation for those signals really to give you some really strong type of trading opportunities. So the bias depth heat map gives you that. So if we just zoom out a bit, there's 6 different time frames there with a bias for each time frame. And if you're not getting the confirmation, it's it's probably going to be a for example here on the 17th of April last week, we got a signal here with all 6 green, and he went on and touched the take profit was at that sort of linear support and resistance zone. But when we're in the middle of nowhere and we've not got the backup, it's the sort of thing I would step away from, really. If I was going to get a signal, and this is the VWAP Predator, there's other signals and types of strategies, I'd want the confirmation. Otherwise, not interested. Okay, that's coming down a little bit. We can add the manager to this. I just don't want to overload while I'm actually streaming. So next time I'll add the manager to this. If I add it now during the live trade, it could lock things up. Okay, so really now we just had a candle close. We need to be at 3403.10 for the stop. Sorry, 34032 even. I would actually now on my double down just go below this pivot here, just to make sure, because that was a big rejection. A lot of buy auditing at that point, so I want to make sure I'm below that pivot. I don't want to move that until we get some sort of either continue move up or we do get the break. But I think this probably is sensible here. The risk is reasonably low, so we're out of there, and that was a loss of 264. Okay, now that's in, that's going. Okay, so we lost 264, but you see how frenetic that goes when we break that channel. That is huge. So bear with me a second. I'm going to move that back up above that channel now. Okay, and to be honest, when you double down, you are in a mode where you want to basically flatten that initial loss unless you go beyond it fast and you make profits. So there, target wise, it's easy just to flatten it. Once you get to, so right now, because I'm on two contracts, when we tipped down to these lows, I was actually in profit, net profit overall for the day, and I am now. I'm $100 net profit overall for the day. So one of the things, the first trade that was the loser that broke that trend Now this particular trade is $470, $530 in profit right now, $590 in profit now. So what I'm going to do is close the position. Okay, so I had the one contract for my traditional trade. I used what I talked about, and again, go back and look at the video about these trend channels using these buffer zones. And if it breaks out of that buffer zone, the strategy was to double down. So by just doubling down, I initially lost that $240 odd, and now $276 in profit for the day because I doubled down. I realized, and again, it's all about understanding behavior here. When you've drawn these non-linear support and resistance zones in, and it's a really strong track, and every time it comes down, it finds that support, and you're already in a long trade, just keep following up with your trailing stop. And again, I'll zoom in right here. So with the one contract that was taken out there, I sensibly took it's not a revenge trade, it's a double down trade, through that pivot with two contracts. Remember, the original was on one contract. Okay, so then it just, when it breaks, and I said this during the video, when it breaks this, it breaks with force. Gravity takes over. You double down, you get at least back what you've lost. But because the movement was so fast and I had two ticks instead of one tick, I ended up net for these two trades $276. There's $580 odd for this double down trade here. Very strong. Understanding the behavior is very important. I did the work. This is what happens during the day, or if they're in the US, during the night. These are my major pivots, top and bottom. I've drawn these separate channels in to identify my buffer zones. I've had a signal with my VWAP predator, got room to the next buffer zone. I've got all 6 time frames green. I'm going to take the trade. I'm then going to, one candle behind, follow this with the trailing stop. If it gets broken, I'm going to double down, exactly what I did. And again, this is a live stream. It's not a video. And this is what happened. So now we were 2 contracts. So I was 1 contract long here at 3405.8, and then the stop was taking out at 3403.4 or something like that, and then 2 contracts short, and then get out net profit. Okay, understanding the behavior, very, very important. So I'm going to stop this live stream now. I've done 2 today. I'm not going to do any more, and then I'm going to go back on the video. I'm going to put some links in there later on, maybe just to our product catalog. But the idea is, with NinjaTrader especially, this trading buddy helps me understand the operational landscape of the day, where those correlations are here, this correlation meter, where the data points are. Then I've got that bias depth heat map down here, and then these drawing tools are available on any platform. Hopefully that helps. Speak to you all really soon.